Looking at the data, there's huge change in terms of population. It's forecasted to generate around 9,000 jobs during construction.
9,000, that's huge.
You want your decision to be backed up by numbers. Even though the prices has gone up, so the rent has gone up as well.
With over a decade in data analysis and having built his own multi-million-dollar portfolio, not to mention the founder of one of the most powerful property investing data platforms, Suburbs Finder, Gilbert Melgar, preferring to normally crunch the data in a dark room, I've managed to convince him to actually sit in the spotlight, sharing his expert analysis on 5 key points across affordable regional Australian markets. First, top rental yields.
Although it has a median price of 651, the rental yield is above.
Then rental demand.
It's not just about the vacancy rate. It's also the diminishing supply.
Population growth.
It has increased by 14,700.
Price pressure and capital growth.
If you're looking at short-term growth, this is a good way to go.
What's your choice of 3 areas, all of the metrics being in the right direction?
Townsville, Council of Mackay. We have the Council of...
Any other reason as to why? If you've been looking at investing in regional markets across Australia and want to understand it from more of a data-driven perspective, you're going to enjoy this episode. Make sure to download the entire list of Gilbert's research in the link below. This is the Pizza and Property Podcast. My name's Todd Sloan, and you're listening to my chat with data analyst and property investor, Gilbert Melgar. Gilbert Melgar, it's been too long, man. How you going?
Thanks, Todd. Great to be here.
Mate, it's an absolute pleasure to have you here. This has been an episode that has been requested by so many people around deep diving into a whole bunch of the different data aspects for regional areas. But when you and I were chatting about this, I was like, this is the kind of thing that we can do. We can sort of maybe pull it apart a little bit with Suburbs Finder. But then you kind of took it to this whole nother level, which again, there's the whole downloadable and everything that goes along with this. But breaking this into yields, rental demand, population growth, overall demand for the areas, but then averaging all of them out. I feel like this is probably going to be a longer episode, so we might want to jump into it a little bit more. But before we actually get into all of the nitty gritty, is there anything you want to set the stage with, or kind of like a bit of a disclaimer before we start?
Yeah, of course. Of course, whatever we're going to discuss here, these are all guides. We're not putting in any financial advice or anything, right?
Of course. And this isn't about saying this area is the best. It's about saying this is what the data says about these specific areas.
Exactly.
And narrowing in on where's looking good at the moment, but it doesn't necessarily mean it's going to be the best option for everyone.
Exactly. It depends on where they are on their property investment journey.
Precisely. Well, with that in mind then, do you want to jump straight into yields? Because I feel like it's one of the hot topics at the moment. Like a few years ago, throw a data to map, you could just nail a 5% yield without even thinking. Now you can still get 5% yields and above, but you kind of got to try. Like that's a little bit trickier now. So as far as the yields are concerned, how have you actually measured this? Because you can just find high yields in like super regional locations, but obviously there's other criteria that's got to come into this to be of any use for an investor.
So of course, we're talking about regional, right? So
yes.
We've narrowed down right away by the regions. Mm-hmm. And then we've used one of the metrics is vacancy rate is below 3%. And the next is the rental yield is 5.5% and above.
So vacancy rate below 3% and rental yield above 5.1, do you say?
5.5.
5.5%. Yep. Okay. Anything else?
And of course, median price would be minimum of 350,000 and above. Okay. Because we don't want any 350 below, because that will be within outside regional. You know what I mean? Yeah.
And this is the whole thing, regional and region. It's not apples and apples. Yes. Because some people will say, like, isn't Gold Coast technically a regional town? Like, I'm pretty sure it actually is. And if we're talking about regional of a little town that's got a population of 800 people versus a regional town that's got a population of 150,000 people, that's not apples and apples. So hence why you're cutting 350,000, anything below that, that's basically just like getting rid of all that side, correct?
Exactly. Plus, we're getting rid of the outback, regional, all of that.
Yeah. The place that might be nice to visit, but maybe a bit riskier to invest.
Exactly.
Yep. Okay. So what's first one on the list?
Well, the first one on our list would be Townsville, because it has...
and as an LGA?
As an LGA.
Okay.
Because it has 31 suburbs with high rental yield.
31?
Yeah.
Right. Okay.
So using all those key metrics alone, so Townsville as council has 31 suburbs with high rental yield.
One that's huge. All right. Is there any particular one that's a standout for you that you want to walk us through a little bit of the data on?
So I would look at Douglas.
Douglas, yep.
So Douglas has a population of 7,780.
Mm-hmm.
So that's pretty huge or decent for a suburb alone. Right?
Yeah.
And for over the past 20 years, it's always been an owner-occupier area. The vacancy rate alone is 1.28%. We do not only look at the current or the latest month's data. We also have to look at the trend.
Well, that's kind of what I'm thinking, because this is one of the things with like Townsville especially, is that it was just down and out for such a long time that people bought there 10, 15 years ago, then regretted buying there 10, 15 years ago. Then people that started buying there a couple of years ago kept hearing that kind of, I don't know if rhetoric's a word, that might be a little bit harsh, but hearing that like, you'll regret this is a bad move. Past couple of years, it doesn't seem like it's been a bad move. But if you're looking over that kind of like 10-year horizon, is it still playing catch up and recovery mode, or is it kind of gone past that if you like look back a bit more?
Purely the data side, there's still an opportunity for it to grow because over the past 12 months, for example, that suburb of Douglas, it has only increased by 5%.
Okay, yeah.
And then over the past 3 years, it has increased by 25%.
It's not as much as I thought it would have. And what's the median house price in Douglas?
490.
490. So it's not like you've picked some random like $700,000-$800,000 median house price in Townsville.
Yeah. So it's still affordable.
Okay. Talk to me about infrastructure in Townsville.
Regarding infrastructure, so we have a lot of infrastructure activity happening within that area. So we have on the database, we have 20 infrastructure projects that are happening in there. So we don't only look at the value of the project alone. We also need to look at what would be the impact of those infrastructure activities.
Okay, so is this kind of like comparing like something like a wharf that might have ongoing jobs versus a solar farm that once it's built, there's like Dave down the road that checks it and that's about it?
Exactly. One good example is in here, the Townsville Energy Chemical Hub. So its project value is $500 million, and
it's a big deal.
Forecasted to generate 800 jobs during construction, which is good because it will generate jobs within the local economy.
Does it say how long it will take to construct? Is that
forecasted for 2 years? So from early 2022 to late 2024.
Okay. Yeah, $500 million project. You wouldn't expect that to be done quick.
There's 300 jobs during operational.
300? That's more than I thought there'd be. Okay. So it's not just Dave down the road.
Exactly. See,
okay.
Compared to a mining industry,
yeah,
that it will cost X number of billion of dollars, but after that, it will only generate less than 40 or 50 jobs.
So did you say that was an energy hub, like a solar farm or wind? What is that?
No, it's a processing plant for mining materials for energy.
Right. Okay. When you said energy, I just kind of thought solar. Yeah. I thought it doesn't take 300 people to operate a solar farm. It's a very inefficient solar farm if it is. Okay. And so as far as, and just to pull you up on one other thing there, you were talking about mining and saying like it's maybe not like a mine where it takes a bit to set it up, but then not as many people to run it.
Exactly.
I spent a little bit of the time in the mines a long time ago. I remember a lot of people there, Gilbert. Yep. What makes you say it's not many people to like run a mine? Where's that come from?
Well, depends on what type of mining industry, right? Because there are different types of mining industry. For several, they just set it up during the construction. But construction-wise, they're going to hire a lot of people. But to operate that, it's not going to be that much in terms of hiring people.
Okay, I know what you mean. So when they used to have like shutdowns or they'd be in construction phase, you're right, the mine was like it was packed. Everything was going on. After that, it wasn't. But maybe my experience is a little bit different because I worked at a very large mine. So yeah, I understand what you mean now. That's a fair point. As far as mining and Townsville are concerned though, they're not linked very much, are they? Like Townsville is not a mining town.
No, it's not. That's the great thing about it. The industry or the LGA alone is not solely focused on one industry. It's very diverse.
Can you talk to me a little bit more about that then? Because that's always a concern for anyone investing regional, is they don't want the dominant industry to start going under and then their investment goes under. How diverse, what does it look like?
So they have a mix of course, the defense Department of Defense is there, right? And they have a port area, definitely. And then the healthcare industry is there as well. And then, sort of the mining as well. So it's a mix of everything.
All right. So Douglas in particular, we've got a pretty affordable median house price. We've got some strong yields, strong demand. It's very owner-occ. It's had 5% It's 5% growth in the past 12 months. As far as the economy of Townsville is concerned, it's pretty diverse. It's not relying on one specific industry. And I mean, it's got the yields there that really cover our first base. Out of interest though, where's it going? Because population growth, I can't help but think that was a part of the recipe that kind of made things flop a little bit more before. The whole supply-demand ratio wasn't quite in the right order. Is it still going in the right direction? Is it forecasted to keep growing, or is there some stagnancy ahead?
It is forecasted to still growing, right? From way back in 2001, they're on the council level under 207,000.
207,
within the population. And on 2026, it's forecasted to be 230,000.
So as much as numbers-wise, that's not a huge, more percentage-wise, that's a massive growth spurt over 20 years.
And on 2031, they're forecasted to be 257,000.
2031? Yeah, right. Okay. So lots more people.
Definitely.
Okay, man. Is there anything else? Like obviously there's a lot more on the list when people go and they can check out the full breakdown, but is there anything else that you wanted to talk about on the rental yield side of this?
Almost all of the suburbs that I mentioned, the 31 suburbs, has been consistently above 5% rental yield even before COVID.
Right. So this isn't just shot up because of the madness that's happened over the past kind of 3 or 4 years.
You'll be surprised that even though the prices has gone up, so the rent has gone up as well. Therefore, it maintained the rental yield over time.
Okay, so we can see that demand's been pretty consistent for rents as well. Like, again, every investor is going to be happier knowing that there's people wanting to actually rent the property. Now, speaking of that, let's talk about where the highest rental demand is, though. Around regional Australia, what areas are we looking at?
So the metric that we've used are the rent has increased by more than 3% over the past 3 months.
3% in 3 months, yep. Okay.
And then the rent has increased over the past 12 months. So
well, how much has it increased over the past 12 or just increased at all?
Just increased by 3%. So both 3 months and for the past 12 months. So it has increased by 3% and another 3%. Right?
Okay.
So if you imagine a line, so it keeps on going up.
Yep.
Right?
So that was the minimum.
Yep. That's the minimum, right? Okay. And then we've added another metric that the number of properties that are advertised for rent or the rental listings has gone down by 3% over the past 12 months.
Okay.
And
so less available.
And has gone down again by 3% or more over the past 3 months.
So basically, we're looking at the fact that the yields of essentially rents have been growing and the stock available for rent has been shrinking.
Exactly. And then the vacancy rate has been consistent within the 3% or below 3%.
Okay. All right. How many areas? Because you've got 5 LGAs, yeah? Okay. How many suburbs within those 5 LGAs do you have?
So the first one is from Ipswich. So we have 3 suburbs, and on Central Coast we have 3 in New South Wales. And going back to Queensland again, Mackay, we have 2.
Yep.
And then New South Wales again, we have 2, Shoalhaven, and then lastly New South Wales again, and Lake Macquarie.
And Lake Macquarie. Okay, so but Ippy's the first cab off the rank. All right, what are we looking at there? What's your favorite pick for like the highest rental demand? And I guess if someone's trying to get a property right now, this is the opposite that they want to hear. This is like if you're a tenant, this is the trickiest place to get a rental. If you're an investor, I guess it's the most secure you're ever going to feel that you're going to have a tenant. Where are we looking in Ipswich?
So for me personally, that would be Flinders View.
Flinders View. Yeah. Okay. And why Flinders View? Tell me a little bit more about it.
Yep. Although it has a median price of 651, but the rental yield is above 4%, and the vacancy rate is under 1%. And then the change on the median rent over the past quarter, it has increased by 4%. And then the change on the past 12 months in terms of rent has increased by 13%.
I know that there's going to be someone either in the comments section or thinking it right now going, hold on, vacancy rate 1%. I know there's areas right now that have got a vacancy rate of 0.5%. How does this qualify as the highest rental demand? What's the answer to that as far as the rest of the metrics that make this really stack up for, like, it's not just about the vacancy rate?
Yeah, it's not just about the vacancy rate, correct. It's also the diminishing supply or the continuous diminishing of supply.
Gotcha. Okay. And what figure do you look at to really find that?
Yep. So we put here the minimum of the minimum supply has decreased over the past 12 months by at least 3% or below. So I'm looking at the 12 months change.
Oh, you've actually got a minimum supply metric there in front of you. Oh, right. Okay. Gotcha. I feel like that was a dumb question then.
So the minimum number of, the change on the number of rental listing has decreased by 50%.
50%?
So that's half. And then over the past 12 months, it has decreased by another 60%. So imagine the line has been really going down.
And any other reason as to why? Like, is it becoming more unaffordable? Is it the rental yield? Like, if we go back, 4%, I feel, for Ipswich is not a very high rental yield. So if we go back a little while, is there a bit of yield compression there now because prices have grown?
Prices have grown, but at the same time, the rent has grown as well.
Right. So what was the yield in Flinders Way, yeah?
Yep.
What was the yield in Flinders Way 3 years ago then?
Prior to COVID, it's 4.34.
There you go. Okay. So 4.34 prior to COVID. So we're talking in 2019.
Yep.
Okay. And now we're looking at
4.64. Yep.
4.64. Okay. And how much has that grown in price again, like over the past kind of 3-4 years? If we're talking back to original 2020, pre-COVID, we're at 651 now, median house price. What was it then?
So back then it's 390,000, and now it's around the 651,000.
390 to 651. Okay. And as far as the economy for Ipswich, what are you seeing there that's really pointing towards, this could be a potential place to actually park money long term and really have the knowing that things are going to keep moving forward economically?
One of the things that would impact, on my opinion, is the infrastructure that are happening in that area. So it's about to happen that early 2024, the expansion of the Ipswich Hospital.
Right. Okay.
So it's forecasted to generate 1,700 jobs during construction.
Yeah, right.
Yeah.
Okay.
And that will last for until 2027.
And then naturally need a lot of people to run a hospital as well.
Exactly. Based on what was stated in the document, they lodged in development application, they would add additional 200 beds.
200 beds, yeah, right. All right. Apart from the hospital, is there anything else that's really happening in Ipswich? Government investments, other big spending projects?
Well, not really. That's why, because that's the only one that's happening right now.
Okay.
So that's why we've broken down the research into different areas, because just focusing on highest rental demand alone wouldn't fit all the recipe.
Makes sense. Okay, so you're basically looking at this as like this is high rental demand, and that's great, but that's not the only metric that you want to be measuring when you're making a choice.
Exactly.
Cool. Okay.
We only split it by the top 5 suburbs in terms of rental demand.
And this is why I'm kind of looking forward to the last part on the list here, because then mushing all of these metrics together to actually give us a better overview of what's a great yield, what's a great rental demand, population growth, demand overall. That's when we start measuring all of these factors together and combining them.
Yep, exactly.
Cool. All right. Well, unless there's anything else you wanted to say about rental demand or Ipswich, how about we move on to the LGAs with the most population growth? And just so I can ask, is this population growth that's happened or population growth forecast?
Well, it's a mix of both.
Okay.
But we'll definitely, if we talked about the what already happened, looking at the data, there's huge change in terms of population.
Okay. Yeah. And where are we looking then?
So the change of or increase in population from 2022 to 2023 in terms of council level, we're looking at number one would be Logan.
Logan?
Yeah. Okay. So it has increased by 14,700.
14,700. Do you have that there as a percentage?
Yep. That is 4.1%. Right.
That was in 1 year?
1 year. And it's broken down by the natural increase or the local increase in population alone is 3,000 of that. 3,000 of the 14,000 are natural increase. 6,000 are from internal migration, meaning from different state, different councils, right? But more interesting is another 5,500 of that came from net overseas migration.
So what are we talking there? Almost a third is actually international migrants coming to Logan. Yep. And I know Logan's a pretty big LGA as well, but that's still a big percentage, like even in comparison, isn't it?
Yep.
Yeah. Okay. What's driving it?
One of the reasons if people are migrating there, it's still the affordability. So you can still get a house or median house price is still, there are still pockets there that it's still under the 600 median.
I reckon you'd be hard pressed to find it, but so that's actually what the data's showing. You can actually get it under 600 still. Yeah, right. Whereabouts are we talking?
So one would be in
Browns Plains or
Undula.
Yeah, okay, Undula.
And then one would be Woodridge.
Woodridge, yeah, of course.
And Eagleby.
And Eagleby.
Yep.
All right, but which one is like your top pick as far as population growth's concerned? Is this just I'm just looking LGA, or have you actually gone into suburb level? Because personally, I don't really look at suburb level population growth, but do you dig that deep?
No, I haven't dug on that yet.
Yeah.
But yeah, that'll be doable.
All right. So we're talking LGA, and so looking at still some pretty solid median house prices there for Eagleby, Woodridge, and Underdale. Did you say?
Yeah.
Not Underdale. Is it Underdale?
Undula.
Undula. Yeah, I was going to say I'm confusing that with Underdale and Adelaide. Undula. All right. So when we're talking population growth for all of Australia, Logan is like the place that everyone seems to be moving to as far as LGA is concerned. What's next on your list? Is it another Queensland area?
So it's the council of Moreton Bay.
Moreton Bay. Okay, so we're basically just gone to the other side of Brisbane.
Yep. So it has increased by 2.7%, and that's equivalent to 13,332.
13,332.
Yep. And 6,000 of that came from net overseas migration.
Overseas. Yeah, right. Okay. So it's not just people going, I want a tree change, sea change, that kind of thing, moving up from Sydney or moving out from inner Brisbane.
Yep.
It's a lot of overseas migration.
So yeah, so as I mentioned, net overseas migration is almost half of the increase.
Okay.
So that supply alone is something that demand needs to catch up.
Right. Okay. And so there's a lot of areas. So I can understand you right. There's like specific areas in Moreton Bay that are mainly driven by overseas migration. Is that what you're saying?
Yep, that is correct.
And so as far as where people are actually coming over from interstate migration, obviously a lot going into like the LGA of Moreton Bay, but is there any way of sort of defining that a little more, or is it just Moreton Bay as a whole?
Looking at the postcode level, right? Because what I did is I look at the postcodes where the migration or the migrants are being placed by the government into overseas migration.
Yep.
So the postcode is we have 4511.
4511. Okay.
And 4510 all the way to 4514 to 16. Yep.
So what I'm kind of hearing there is, as much as this, like a last category before we get into the overall list, is demand. But we're talking about the supply, so the population growth here. So obviously we need to talk about the metric of supply actually keeping up with that demand for this to really affect price pressure. But if we're just isolating the population growth, it's sounding like 4511, 4510, so on and so forth,
Yep.
these postcodes, they've got a lot of potential to experience a higher increase in demand if that supply doesn't actually keep up.
Exactly.
All right, so we've done top list for the yields, top list for the rental demand, top list for the population growth. Let's start talking top list for just demand overall, stuff that's really going to put some pressure on prices. Yep. Before we get into the list here, how do you put this together? What metrics did you use?
So if you'll notice, the metrics that I use are pretty more than what I previously used for those three categories.
Okay.
So we use probably 9 or 10 metrics in here.
Okay.
So first would be the vacancy rate is below 3%. Yep. And then overlay that with percentage on stock on market is below 1%.
Below 1%. Okay.
So for those of you who don't know what stock on market percentage is, stock on market percentage is the number of properties that are for sale versus the number of overall properties within the area, or the total number of dwellings. So
how is that different to inventory levels?
Inventory levels is versus on the days on market sale listings, or the number of sales. Yep.
So stock on market, like for easy numbers, if there was 1,000 homes in an area and there was 100 homes on the market, there would be 10% stock on market.
Exactly.
Gotcha.
Yep.
Okay.
Yep. And then days on market is below 60 days. And then, of course, median price again is $350K and above. And this is pretty interesting. The average number of sales for the past 12 months is 50 and above. The reason why I did that, so that at least we can have a more reliable data that we can base on. Because more sales, more activity is happening, the more reliable the data is.
Of course. Because otherwise, if you can look in like one horse towns and see these like huge spikes and drops and like medians and stuff, just because one fancy house sold or one really bad house sold and there wasn't much to compare it to.
Exactly.
So you're looking for as big a pool, a sample size or sample size? Pool.
Sample size.
Yeah, sample size. Yeah. I don't know. I'm thinking about swimming for some reason, but you're looking for as big a sample size as possible, because then that's going to make this data more reliable.
Yep, exactly.
Gotcha.
Because all of this transactions are based on the number of sales, right? So the more sales activity that's happening, the more reliable the data is.
Makes sense. Yep. All right. Anything else you wanted to talk about as far as like how you chose it before we actually get into the list?
Yep. And then I've added the 3 months change on days on market has decreased by 3%.
And why 3%? 3% seems to be a bit of a running theme. Is that?
Well, that's my benchmark. Yeah. So at least it's pretty decent that you know that the market has already started to move or just started to move. Right?
Out of interest, if we play with that, what does it produce if you like go to town on that and instead of it being 3% increase by more like 10% or 20%? Is there anything left on the list?
Yeah.
Yeah? Can we have a quick look? I'm just curious now.
Yeah. So what I'll do, so we already have here, save all of those. We'll change the days on market. Right? So what I did is from -3 all the way to the max. So we already have 107 here. So if I put that all the way to, let's say, -10, that means it has decreased by 10% or more over the past quarter. Then we have at least half left, 71.
Interesting. Okay.
Yeah.
And obviously, again, there's one metric. It's not all about just having one data point and just leaning on it, but that's okay. So there's still a few in the list.
Yep. And then next is, so that's for 3 months. And then over the past 12 months again, I put -3 again. -3 meaning it has decreased by 3%.
Gotcha. So -3 for both of those.
Yep. So imagining a line that goes going down. Days on market has been going down. So
and this is why you measure the 12-month and the 3-month, because just because it's gone down over 12 months, if it hasn't in 3 months, well then that's not a trend the same way.
Yep, exactly.
Makes sense.
Yep. And then you can know, it just signifies that it tells you a good story that there's a good demand because the days on market has been going down. Right?
Gotcha.
And then I overlaid that with the last 2 metrics that I used is the sale listings over the past 3 months has gone down as well by 3%.
So you're overlaying a ton of different supply and demand metrics. You haven't just got like 3 or 4 in here.
Because this is an overall demand, right?
Yeah, okay. All right, and what have we got on the list? What is it left?
So the first would be, again, Queensland.
Queensland.
Yep.
It's all about Queensland. Okay. I'm genuinely surprised. I thought more of this would have been about Perth. Perth is just such a hot spot at the moment and I know Queensland's still smashing it, don't get me wrong, but I'm actually surprised you're not talking about WA a lot more. Is WA in this at all?
Well, I'm not talking about WA because we are talking about regional.
Good point. Okay. Actually, that's a very good point. So we're talking about all of the regional centres. Queensland by far has got some of the most popular regional centres. Okay, this makes a lot more sense. Whereas everything that's happening in Perth at the moment is really happening in Perth.
Yes, exactly.
All right, and what's one of your top picks on the list here, Gilbert?
So we have Gladstone.
Gladstone.
Yep.
Okay. Tell me about Gladstone. This one hasn't appeared yet.
Yep. So Gladstone, based on the data that we overlaid against each other, there are 6 suburbs that matches all those requirements.
What can you tell me about Gladstone just as a town overall? Like, because I'm sure there's a lot of people that are like, yeah, I've heard of it, but I don't know much about it.
Well, there are 7 infrastructures.
Like infrastructure projects?
Yep, projects in the pipeline. Well, one of the biggest is the Central Queensland Hydrogen Project.
Okay.
Which is cost is between 1 to 3 billion.
Okay.
Yep, and that is forecasted to generate 9,000 jobs during construction.
Did you say 1 to 3 billion?
Yep.
That's a big variation. Could you imagine going to a customer and be like, could be 1 billion, could be 3 billion? What? Anyway, all right. So either way, variation aside, how many jobs is that creating?
Well, it's forecasted to generate around 9,000 jobs during construction.
9,000. Yep. Okay, so that's huge.
Because when I was reading the project, the project is about laying down the pipes for the hydrogen, for the water to go. And they're talking about long kilometers of pipes in there. Yep.
Interesting. And what about ongoing? Does it say anything about how long, or this is purely a construction phase kind of
purely
project?
A construction phase at the moment, because it's forecasted to end in 2028. So they don't have any forecast on how many jobs after construction or during operational.
So what does that make you think then? And again, this is why it's so important to have the overall score, like looking at yields, rental demand, all the rest of them all together. Because one of the first thing that comes to mind for me is this one of those towns that might be like, yes, there's huge demand when things like this happen, but then the demand can kind of like really pull back and all of a sudden it's not ghost town, but like you're in a little bit of trouble. Do you know what I mean?
Yep, I know what you mean. But yeah, so you don't depend on just one infrastructure project. You gotta look at what are other infrastructures happening and what are already the existing industry that's already there, right?
So 9,000 jobs, like I'm just looking at this thinking, is this just more of like a sugar hit kind of town? Like I personally don't know Gladstone that well. I've looked into it a bit. I actually looked when I was looking for a block of units there a while back. And whilst I'm not opposed to it, I'm kind of thinking like I'd want to see a bit more diversity in this industry as well, because a whole bunch of people coming in and then jobs kind of going in 4 years is not ghost town, but is there going to be a big vacuum in that area? What's the rest of the industry kind of look like?
Well, checking out the rest of the infrastructures that are lined up at the same time, or checking on the current industries, it's also heavily related in the mining industry. So
what's coming up and what's already there is very mining dominant.
Exactly. So if you're looking at short-term growth, then probably this is
bit of a sugar hit,
a good way to go.
Yep.
Right? And also depends on where you at on your investing journey and in your portfolio. But if you're looking on long-term, then probably it's something that you have to consider other regional areas as well.
And it's a big thing to look at as well with the mining side of things, because instantly that like puts across through it for a lot of people. But for people that go, no, cool, I'm open to it, is checking the lifespan of the mines, because you could have a mine that's like technically, there's 10 mines in town. It's like, cool, great. And when I say in town, like, near enough by for it to actually affect local economy. But if there's a lot of mines, that doesn't necessarily mean that there's a long lifespan with those mines. They could have a lifespan of 10 years. And it's like, well, then that doesn't really matter. It's similar to a construction project versus a mine that's got a lifespan of 50 years, 100 years. That's going to be there for a while. So it's a little bit different again. But again, it's still laying over that complexity of mining. And I think as Australians, we seem to be a little bit burnt when it comes to investing anywhere around mining towns. If you're new to property investing, you might be going, why? Just research Port Hedland and Roxby Downs and you'll see a little bit of proof as to what can happen when it doesn't go right. And those are just two examples. So if anyone's looking for that quick sugar hit, obviously we've got most of the areas, or not most of the areas, we've got all of the areas in the demand list. So if someone wants to see all of them, they can download that with the link below. But right now, can we move into, like, I feel like cutting to a shot of that, this is what we came for, but like the top list. Okay, let's start putting all of these metrics together. And what's like 3 that you like on this list? Because I think there's 10 overall. What's your choice of 3 areas that are actually really leaning towards all of the metrics being in the right direction?
Yep. So one that I pick would be, looking at the data alone, is Townsville.
Townsville?
Yep. For the reason that there are 17 suburbs still affordable within the median price of $350 to $450.
Seems so cheap.
Yep. And there are 21 infrastructure projects happening in that area.
Okay. So a lot of investment going in, very affordable, still good yields.
Exactly. Gotcha. And the number of suburbs that has a minimum yield of 5%, 24 suburbs.
Okay. So if someone's falling behind on their serviceability when they're sitting down with the broker, could be somewhere to consider.
Yep, exactly. And then the population change is 1.7%. So that's equivalent to 3,300 increase, right? So the population has increased, and the development approval for the past 2 years, so from 2021 to 2022, it has decreased by 28%. So these are just overall for houses and units.
So we're getting more people moving there. So our supply is not increasing, though. That's down 28%.
That's for 2021 to 2022. And for 2022 to 2023, it's down again by 27%. So it's been down by 2 consecutive years.
Okay, so anyone that's concerned that we're just going to see a history repeats itself type scenario, whilst no one knows for sure, but right now the data's not really lending itself to that narrative. It sounds like it's pretty protected.
Yep. So we don't have a crystal ball, right? But we can only limit the risk by looking at the data. And one of the future metrics is the development approval.
That makes a lot of sense, man. I can see why Townsville is top of the list for you. So what's another one? Let's take a few out here.
Another one is in Queensland again.
Yep.
So it's a council of Mackay. Right? So this time there are 9 suburbs within the median price of $350 to $500, and then there are 7 infrastructure projects happening in that area. And there are 15 suburbs that has a minimum rental yield of 5%.
All right, talk to me about rental demand as well.
Yeah. Mackay is on the list of our rental demand as well, right?
Okay.
So, as I discussed a while ago, we have the top 5 in terms of rental demand. Mackay is in there. So the rental listings has changed over the past 3 months, less than 3%. And it has also decreased by 3% as well. So the demand, the listings has been going down. The median rent has been going up. So it has gone up by minimum of 3% over the past 12 months. And over the past quarter, it has increased by minimum 3 months as well. Up 3%, sorry.
All right, so it's ticking the yield boxes, ticking the affordability boxes, ticking the rental demand boxes. Sounds like it's ticking a lot. What about population growth? Is Mackay growing?
So it has grown by 1.6%. So that's on the LGA compared to the statewide, which is 2.6%.
Okay. What about if we then overlay that the same way we've just done with Townsville as far as building approvals are concerned?
Yes. So the building approval from 2021 to 2022 was down by 29%.
Okay.
And then from 2022 to 2023, it's down by 45%.
Wow. Okay. All right. So we've got more people moving. It sounds like population growth isn't like one of the huge drivers here, but there's still growth in the population. There is a definite downturn as far as rental demand, as far as buildings concerned. So the supply and demand, it's probably going in an investor's favor. Now we're talking about infrastructure projects. You said that there's a bit going on as far as the spend for Mackay. Now Mackay is also a bit more mining driven, or is it a little bit more diverse?
It's a little more diverse compared to Gladstone.
Right. Okay. So anyone that's feeling like I really want to stay away from the mining stuff, you're not 100% staying away from it, but you're not 100% relying on it in Mackay.
Yep, exactly.
Gotcha. All right, man. You got a last pick on the list here that you want to chat through.
LGAs that I mentioned are heavy Queensland.
Yep.
So this one we're moving to WA.
Okay. Yep. So there is actually something near Perth. Well, WA.
Yeah. Well, considering all the combinations of the data metrics that we've overlaid against each other, right?
Yeah.
So we have the Council of Bunbury.
Of Bunbury. Okay. Yeah. How far away is Bunbury from Perth? How regional are we talking?
So it's around 160 kilometers from Perth CBD, and that would be, I guess, two hour drive.
Okay, so you're not commuting. Like it's not like you could technically live in Ballarat and go to Melbourne. I don't think many people do, but you could if you had to, an hour sort of drive on the freeway.
Yep.
This is like if you're there, you're there.
Yep.
Yeah. Okay. Yep. Tell me a little bit more about Bunbury.
So there are still 4 suburbs that within the median price of between 350 to 500.
350 to 500. There's 4 suburbs. Okay.
And then there are 2 infrastructure projects. And then the yield, there are 6 suburbs that has a 5% yield and above.
6 suburbs, 5% and above. Okay. Now for anyone that's thinking Perth already feels like I may as well be going to another country. I live in Brisbane, Sydney, Melbourne, Adelaide, like the other side of the country. And Perth is like, I think pretty sure it is technically the most isolated city in the world. To then go isolated on top of isolated, you'd want to make sure that there were some pretty strong drivers there. What are the other drivers that are making you look at Bunbury and go, no, like who cares about this isolation factor? This is looking pretty solid.
Well, there's a little bit increase of migration as well. It's 1% increase compared to the whole state of WA, which is 3.2.
Okay.
And that increase is on a almost 400 increase, right? Not much, but if we're going to compare that with the number of development approvals over the past 2 years, it's down again. So from 2021 to 2022, it's down by 24%.
Okay, so we've got reasonable, or actually I'm going to even go, it's like smaller population growth, but there's a large drop-off in construction that's making you go, here's some supply demand out of whack. Gotcha. Okay.
Exactly. And then 2022 to 2023, so that's a decrease of another 30%. So it has increased by 24 and another decrease by 30%.
So anything else about Bunbury as we get to the pointy end of things that really made you go, yeah, this is on the list?
What made me include that is because of the diversity of the industry of employment in there. Almost 7% of the employment of the industry is hospitals.
Yeah, right.
Yeah. And then
a lot of sick people there?
5% is secondary education, right?
Okay.
And then 4% are cafes and restaurants. And then the rest are all mix of everything. So it's not really highly reliant on
like one industry.
Like,
okay, so it's its own little self-sustaining, diverse like economy.
Yep.
Interesting, man. Look, I think people are going to have a lot of fun going through this and going through the whole list. But getting to the end of everything, the whole purpose of this episode was, one, to give people a good overview on some regional areas that have got a lot of, well, upside for yield, upside for rental pressure, upside for population growth, and upside for just capital growth in general. The other side is putting all of those areas together and going, all right, which ones are ticking the boxes overall? So we can really get a list of like, okay, this is really looking like an area that's got some strong fundamentals working in its favor. The big thing that I want everyone to take away from this, and everyone, you listening right now, is to play with this yourself, to actually go through the data, because one, it's just fun. I don't know if it's just fun for people like me and you, but two, this is forever changing. This list that right now, if you've just downloaded it, it's going to be super useful for you, but it's going to be super useful for you now. It's not going to be super useful for you in 12 months' time. The real estate market is a forever evolving landscape. Gilbert has been kind enough to actually give us a discount code that's inside the booklet as well that extends the free trial within Suburbs Finder. I highly encourage you guys start playing with this, because if you're serious about property investing, you want to understand the numbers. You want to understand not only what they all are, how they work, how they come together, and how, well, like we've just discussed, just finding an area that's got great population growth, good start, but it's not enough. You want to be able to overlay stuff and look at it logically so you can actually make a decision, again, that is the best for you, your situation, and that actually has the highest likelihood of meeting your goals. So, mate, thank you for actually doing that, because, yeah, it was very generous of you. And I think that's going to help a lot of people out, man.
No, my pleasure. Because, at the end of the day, property investment or property investing is a game of finance, right? Mm-hmm. And finance involves numbers.
Mm-hmm.
Data. So as much as possible, you want your decision to be backed up by numbers, right? And not by emotions.
Yep, absolutely. And the better understanding that you've got of the numbers, the better the likelihood of you successfully building a portfolio. You've got to look at the data over a range of different data sets and not just pick one or two. But mate, look, I really appreciate your time putting all of this together. I know this was a ton of work for you to go through. And look, I know you don't love being on camera, man, as well. So thank you for actually stepping out of your comfort zone and doing this, because I appreciate it, and I know everyone watching does as well. But Gilbert Melgar, we've officially gotten to the most important question of the entire show. What is your favorite pizza?
Anything with meat lovers.
Yeah? Meaty meat? Are you getting this anywhere special?
No, not really. Any.
What, do you and Diane cook much at home? Yeah? You making pizzas much?
Well, once in a while when the kids request one, yeah.
Yeah?
but for them, the kids will be the one to put any toppings they like.
Yeah, they just go to town?
Yep.
Yeah, okay. All right, man. Well, look, we better leave things there. But Gilbert Melgar from Suburbs Finder, thank you so much for jumping on the show, mate. I really appreciate your time.
Thanks for having me, Todd.